Welcome everyone to today's Q&A session. Again, my name is Natalie and I'm here with Dmitry, and today we're going to be answering all of the self-directed IRA and solo 401k questions. If you do have questions that come up during this session that you didn't submit, just go ahead and type them up in the chat area. We will answer those today. Our next live Q&A session, it's going to be on Monday, July 17th at 11 a.m. Pacific Standard Time. So if you have questions that come up after today's session, just please register for the next session. And even if you don't have any questions, feel free to sign up for it. You always learn from other people's questions also. But before we start our Q&A session, I'm going to give a brief introduction about Dmitry. Dmitry is the founder and the president of SenseFinancial LLC. We are a boutique financial firm. We specialize in self-directed retirement accounts with checkbook control. Back in 2000, he started his career in financial planning and real estate investing. And today he is a licensed California real estate broker, a real estate investor, and a private lender. Over the years, he's taught hundreds of investment and financial planning seminars, and he's mentored thousands of investors. So thank you, Dmitry, for joining us and for taking the time to answer the questions.
Well, Natalie, thanks for the introduction, and thank you guys for joining. Looking forward to answering your questions.
Okay, so we're going to jump right into answering the questions. The first question is from Gabe. How do I do a backdoor solo 401k Roth?
Thanks, Natalie. Gabe, when it comes to a backdoor Roth, that's normally a term used with the Roth IRA. Based on your income, you may not be eligible to make contributions to Roth IRA. However, with the solo 401k, you can contribute to Roth solo 401k regardless your income. So you don't need to do it through a backdoor. You can contribute through a front door. Again, there is no reason to contribute pre-tax and then convert. You can do contributions up to $22,500 plus $7,500 catch up. If you're over 50, up to $30,000 can go directly into Roth, regardless of your income. So there is no reason to do it through a backdoor.
Okay, great. Our next question is from Jacqueline. The employer contribution I make, is that a percentage of my pay or from business gross income?
Jacqueline, the employer contributions are called profit sharing contributions, and the profit sharing contributions are based on your compensation, not the business gross income. It depends on how your business is taxed. If you are taxed as a sole proprietor or single member LLC, taxed as a pass-through sole proprietor, then it's going to be based on your net self-employment compensation. If your business is a corporation or LLC taxed as a corporation, it's going to be based on the salary that you take or pay yourself from the business. So it's going to be based on your W-2 wages. And in this case, it's going to be 25% of your compensation, which is your wages in case of a corporation. In case of a sole proprietorship, it's 20% of your self-employed compensation.
Okay, next question is from Rudy. My solo 401k has over $250,000. How can I protect it from bank failure?
Rudy, good question. We actually recently held a webinar with our preferred bank, Solera. I invited bank's president to come on and talk about the potential, what's happening in the industry and the risks. And this is only concern, Rudy, if you have more than $250,000 in cash. When you say you have over 250, I'm assuming you're talking about total, the total volume of your 401k. And if it is invested in assets, then it's only based on cash. Your cash account is protected up to $250,000. So I will recommend that you go and watch the recording of that webinar where bank's president explains the options that you have available. But in the nutshell, you do want to break it down and possibly two accounts. And there's ways to do that. But again, for most of our clients, that's not applicable because they don't keep that much cash. So it's only your cash is potentially might be at risk at the bank, but only if it's more than $250,000 in cash.
Okay, next one is from Gopi. He would like more information about solo 401k fees.
Gopi, I'm assuming you're not a client. I don't recognize your name. We do have our fees are displayed on our website. They're pretty straightforward. We charge $600 for the initial setup fee and then $200 flat annual fee for the maintenance. That's it. So pretty straightforward. Again, we do spell them out on our website.
Okay, next question is from Chris. When investing in real estate with my solo 401k, are there advantages to use for a single property?
Chris, I'm trying to understand your question. When investing in real estate with my solo 401k, are there advantages to use for a single property? So I'm not sure exactly what you mean here. Yeah, I'm a little bit unclear, Chris. So why don't you reach out to me directly? You can own a single, or maybe you're talking about single family property, but buying rental property. You certainly can do that. Many investors buy rental properties in their 401ks. So is there advantage of one investment over another? It depends. You got to look at your personal investment experience. You got to look at those particular investments. But I think I'd like to better understand your question before I can truly answer that. So Chris, reach out to me directly. Happy to chat with you.
Okay, next question is from Ankush. Can I buy raw land using a self-directed IRA and then obtain a construction loan to build on it using land equity as a security for the loan?
Ankush actually asked this question on Bigger Pockets forum, and yes, you can buy a raw land inside of your self-directed IRA. You can invest in virtually anything using your self-directed IRA. That can be raw land, can be real estate, can be precious metals, so virtually anything. As far as obtaining a construction loan, that's going to be the challenge, because you can when you buy a real estate inside of a self-directed IRA, you're not allowed to provide a personal guarantee. Therefore, the loan must be non-recourse. So you have to use non-recourse financing, and it's not difficult to get on a rental property, whether it's single family or multifamily. But on the land, just financing the land is probably going to be difficult. I'm not aware of any lenders that can do that. But what's even more challenging is the construction, because again, you're not allowed to provide a personal guarantee, and none of the non-recourse lenders that I know of offer a construction loan. So maybe it's some kind of a private loan maybe you can obtain, or maybe you can try a local bank, but again, it has to be non-recourse. But I doubt you're going to be able to do that.
Okay, next question is from David, and was also submitted from the Bigger Pockets forum. He has a question about building a rental house. I want to use the Checkbook IRA LLC to purchase the lot and then have a contractor build a house. Is that possible, and are there any headaches?
Yes, David, that is possible. You can certainly you can use a Checkbook IRA LLC to purchase a lot and then have a contractor build a house. It's a somewhat similar house to the previous question, but David is actually not planning on using financing. So apparently David has enough cash in his IRA to pay for the purchase of the land and then for the construction of the property. So yes, that's possible. Just you have to remember that you are disqualified person, and as a disqualified person, you're not allowed to benefit from your IRA assets in any way, and you're not allowed to provide any service to the 401k. So you can simply sit in your home office. It has to be hands off. You can have a say in the choice of the construction material and finishes and so on, but everything has to be hands on, and all the work must be done by the unrelated third party. So if you do have a contractor lined up and you have the money in your IRA to pay for all of that, certainly that's possible.
Okay, next question is from Peter. He is buying with a self-directed IRA. He wants to know the pros and cons for purchasing properties in a joint venture or solo. He's trying to understand his best options, especially when incorporating a non-recourse mortgage.
Yeah, it's a somewhat common question, Peter. Should you buy or make the investment by just using your self-directed IRA, or can you partner with someone using a joint venture or some kind of a partnership? You can do that. You can do either or, but whenever you have a partner, there's always complications. So to keep things simple, you probably, if possible, then you want to probably do the whole project yourself without partners. But when it becomes more challenging is actually financing. When you have an IRA and your IRA wants to partner with somebody else on the purchase of a property, again, the loan has to be non-recourse to you. Now, your partner can guarantee the loan, and if they're willing to do that, then yeah, you probably can get the financing. But if you're trying to get a non-recourse loan, again, none of the lenders that offer these loans that we have on our list will be willing to touch that kind of a loan if you have a partner who's not a retirement account. So you either have to convince your partner to use a conventional loan and personally guarantee that loan, or you're going to have to do cash. But again, I'd like to keep things simple. Remember that KISS principle: keep it simple, stupid. The more complex the transaction, the more possible things that can go wrong. So try to keep it simple. That's my recommendation.
Okay, we do have one more question that was submitted. Again, if there are any additional questions, please feel free to type them up in the Q&A chat area. But this question is from Hooping. How can I transfer a property out of my retirement plan to myself for personal use and to spread the taxes over a few years?
Good question. If you would like to take a property out of your retirement account, that is possible, but you will have to the only, because you're a disqualified person, and as a disqualified person, you're not allowed to provide a personal guarantee to I'm sorry, you're not allowed to engage in any transaction with your retirement account. So it's not possible to sell the property from your IRA or your 401k to yourself. The only possibility is to take in-kind distribution. And in-kind meaning that instead of taking the cash out, you're actually taking the asset out. So if your IRA owns the property, you can distribute that to yourself. That will be a taxable event. You will have to get the property appraised and at the time of the distribution, and that will be a taxable event. Now, when you're taking distribution from an IRA, if you pull in the entire property out, there is no way to spread the tax liability. you're going to have to pay the taxes in a single year. There's been a possibility to do that during when the CARES Act came out during a couple of years. There's been, but that's just been a temporary change in the rules. Overall, if you're taking the property out, you're going to have to pay the taxes and the entire distribution in the year in which you take out the property.
Okay, so those were all the questions that were submitted.
Natalie, I do see a couple of questions just came in here.
Okay.
One from Andrea. She's asking about the control group. Do I total the net business profit from both of my Schedule Cs to calculate the profit sharing contribution, or calculate each separately? Yeah, if you have two Schedule Cs, Andrea, then it's really just it's you as a sole proprietorship. So that's not even a control group situation. So you just use the total income to make that calculation. Next, we have a question from Scott. This might be a 101 level question, but I want to confirm that we only need to file 5,500 easy if we have over $250,000 in our 401k. So yes, if your total plan assets are below $250,000, you're not required to file Form 5500 easy. That requirement kicks in only when you have over $250,000 in plan assets. However, we do recommend that you file it regardless. It's a good practice. You get into a habit filing that. You learn how to complete that form, even though it's very simple, but you may need some guidance the first year you do that. And also, you get the statute of limitation going once you file the form. Without filing, there is no limitations when IRS potentially can come after you. But if you do, I believe it's 3 years. So it's a good practice. Question from Michael. Can you use solo 401k as a hard money lender to yourself? Absolutely not, Michael. You cannot interact with your retirement account in any way. You're a disqualified person, and that will be a prohibited transaction. And I think last one here at the bottom comes from Rebecca. She's asking, can you partner with yourself? In other words, whatever the shortfall of the purchase of real estate from the solo 401k, can you be the partner and invest the difference instead of a loan? Or should you loan the solo 401k the money? Well, first of all, you cannot lend money to your solo 401k. You're a disqualified person again. Remember, all transactions involving your solo 401k must be arm's length. It's possible to partner with your retirement account under certain circumstances, but that's not a recommended option. I normally don't recommend that because what's the reason you're trying to partner? If you, let's say you looking to buy a property for a certain price and you don't have enough funds to do that, you cannot get a loan, and you're trying to pull your 401k funds together with your personal funds, then you're actually committing a prohibited transaction because you're enabling your 401k to participate in a transaction that it otherwise will not be able to participate in, and vice versa. So it's possible under certain circumstances. Talk to me about the specifics, but normally we don't recommend that. There are many investment options available out there, and try to, again, keep it simple. And even if you make a transaction that is by the rules to begin with, when you are in such a partnership with disqualified person, number of things can go wrong. And I've seen that those transactions can go sour, and the prohibited transaction can result out of a transaction like that. So that's not something that I will recommend. I believe this is it.
Okay, well, thank you everyone for joining us. This brings our session to an end. Our next Q&A session will be on Monday, July 17th at the same time, 11 a.m. Pacific Standard Time. So if you have any questions, please don't hesitate to ask. We always love answering questions, and not only do you learn from your questions, but so do others. So I hope you all have a wonderful day.
Thank you for joining us, and have a great rest of the day.